Three, two, one. Good morning, traders and investors around the world. Welcome to this Thursday edition of Pre-Market Prep. Pre-Market Prep with Stock Odds here on a wild, absolutely crazy Thursday morning here. We've been up and down and all around. We took out the pre-market low. Looked like we were going in the tank. All of a sudden, we rally. We just take out the pre-market high by 2 ticks, and now we're tanking again. Don't know what's going on, but volatility, not good for the market. We have the dollar index that's down to about 12 cents at 109 and a quarter. TLT just in the green by 8 cents at 108.12. Crude getting shellacked down to the double bottom support area, down 328 at 85.20. Gold in the red, under 1,700. New low for the move, down $16 at 1692.90. Silver getting no, silver is okay, down 7.4 cents at 1949.5. Bitcoin, that's in the red by $15 at 19,910. And Ethereum futures, they're down $51.50 at 1525.5. Rob, first of all, I had to look up syncopation, so now I know what that is. But what are you doing to the markets today?
Well, you weren't too far off when you said it was Wednesday today, because it does feel a little bit like Groundhog Day. So like yesterday, I'm going to share my screen here and
okay.
Yeah, release here. Okay, release the Kraken. All right. So what I mean by the syncopation is, I took some ballroom dance lessons once upon a time to try to connect my brain with my body in a sense of having any sort of rhythm at all. It was kind of interesting. It was a challenge for me. So I became the student in a very difficult setting, and so I understand when you're learning the markets, how challenging it is compared to those of us that have been in the business for 20 plus years. We've had a lot of experiences. We've seen this movie before, so it was good for me to be the student. But anyway. Ballroom is more the syncopated style of quick, slow, or slow, quick. That's what syncopation is, right?
Yep.
It's not a, and I think the tendency for people, and I've mentioned this on the show before, is to live in the past or live in the future rather than live in the present. And part of living in the past means you default to regret. Okay, so you go back to Tuesday, a massive down day. You look at the day and how it traded, and then you look at all your indicators and you go, of course, I should have been all over that, right? It's like, it was so methodical. We were sliding down the lower Bollinger Band. We hardly had any volatility. We just had a directional down day. So what they want to do then is go, if you didn't maximize the day, right? If you didn't get all you could have extracted out of it, you've got this element of regret. Then you take that into the next day, thinking there's going to be follow through, thinking there's going to be, your opportunity to get the money that you missed the day before. This is a real psychological battle that goes on, a mental thing that you got to be aware of. So there's emotions, there's thoughts, there's all that stuff that goes on. So, but every day is unique and doesn't have to be connected to the day before in terms of, because this happened, cause and effect. Now we have this. Every day has to stand on its own. So yesterday, even though we kind of popped to a bit of a new low very quickly, like we took out the previous day's low, but very briefly, it was a pause and reflect day. And you often get that after a big move. I've seen this so many times. You have a big move and then you have a smaller range day as the market tries to digest what it had from the day before and figure out where it's going next. And you get this battle of bulls and bears kind of that puts it into a choppy range day and a smaller range day. Now we hardly retraced. We did, one fib retracement. We didn't retrace 50% of the move of the day before. So we had a little bit of a retracement. So we took out the low, but we certainly didn't get back to half back or anything like that. Correct, Joel? It was just
it's tried, man. It was such a teaser yesterday, and today is the same kind of thing.
So look on my chart here, because it's a little different than looking at your futures chart.
Okay,
so this is the SPY daily here. You can see that we actually have an inside day today. So this is what I wanted to bring to your attention.
Yeah, we do.
Okay, tomorrow is expiration. It's
you got it.
Quad witch. It's our quarterly expiration, and it's very meaningful, and it is historically one of the worst performing days of September. Okay, now here's the thing. We already had a big bad day that could end up being Tuesday, could be the biggest day, moving day of September, especially on the downside. Okay, so we may have already kind of displaced a lot of that, but it is still on my radar that historically tomorrow is a bad day. So I would be looking for my bias to be, shorting stocks and breaking down from this level, which is going to be absolutely perfect if we, stay within this inside day and we then break down from it tomorrow. Okay. Now, if it wants to break up, that's fine. If it wants to open at a premium tomorrow, I'm fine shorting it, because expiration days are, basically short the premium at the open or buy the discount at the open. That tends to be how things work, because of the options positions that have to be dealt with and what institutions tend to do. Okay, so in general, I'd be looking for an up open and then either a test of the low during the day or a breakdown of that. So this is going to be fantastic if we stay within this inside range, looking for a breakout type of day tomorrow. That's going to be great.
It's supposed to be the biggest quarterly expiration since 2008.
That's significant, right?
Yeah.
And so I expect it to be a bit of a market moving event. Now normally, a lot of the movement happens, like I said, at the open and within the first half hour to an hour. And after that, it's kind of blasé. But it could be something that, based on all the macro, based on the fact that it's in front of a weekend with a lot of geopolitical stuff going on, you never know. Okay. So this is a very interesting chart. But my point with the syncopation is you can see how we had a big move, big range day, and then we took a rest. And that rest is a choppy battle. You have to know the difference between good signal and noise. Yesterday's noise. Today is noise. Today is noise. It's an inside day. It's noise. Okay. So just, don't extrapolate the past onto the present in the sense that, okay, well, because it was a big range day yesterday, it's going to be a follow through day. That's not often how the market works. We can have that depending on the macro and the catalysts and stuff like that. So this day here, we had a big range day too. We broke down out of a range, but the very fact back here in June, when we broke out of this, was a massive consolidation that was related to February 24th. we had a real narrative change about inflation and potential recession, and that's what knocked this thing down. And so there was follow through, but this was just a 1 day move based on the CPI numbers, which, you know, for all intents and purposes, we could have had a good buy side opportunity out of that 1 day event, because it's the same theme that we've been in this whole time, right? All of this, we've had this backdrop of Fed raising rates potentially even more than we expect, you know, inflation continuing longer than we expect. And so the market got kind of hopeful and rallied all the way through here. But, you know, again, reality is starting to set in about how long of this series of problems are going to persist. Okay, so don't be fooled by, you know, rallies within this bear market climate that we're in, and we're not out of the woods. Okay, so let's switching gears here a bit. I found it interesting. Anybody that knows me knows that I don't trade AMC. I mean, it's not one of my stocks that I put in there. So it came up in the top 20 for the the Russell 2000. So there's AMC sitting there. These are all long stocks, and you can hedge with IWM or whatever.
You're an ape.
What's that?
You're an ape. Just admit it. You're an ape.
No, I don't trade it, but it came up here. So let's take a look at the chart on that thing, and see what would Joel have done. I always ask myself, what would Joel have done?
What would Joel done? What are the odds?
You know, so it came up as a buy for today.
Like how high? Like how high? Like what? 0.55? Like where was it?
What the odds were 61.9.
Okay.
Of performance. Yeah,
okay.
It's a long 60 expected change was 0.787. So obviously it's much higher than that. But I had to chuckle when I saw it on the list.
I would have bought the open. If the odds were giving me that, I got a lead on a lower open, I would just throw it out there. I probably would have went unchanged at 991. I would have gotten done at 975. I wouldn't have risked it down to yesterday's low. I don't know what you would trade this thing with a 15, maybe 20-cent stop. And I would try and still be in the trade. I have nothing at 1039.
Your backdrop is you've got odds on the buy side for today, and you have a discount open. So these things are really advantageous, and that's what you have to look at. Like if everybody saw the same thing, didn't have StockOdds, let's say, but had other sources and saw the same thing, that it was a buy for today, it could have gapped up a lot, and that wouldn't be no interest at all, right? But because it gave you that discount open, and it was quite stable pre-market too, so it gave you a discount open, and you know, like again, you can set your threshold in terms of percentage loss on the position or a fixed number, or you could just be, say, monitoring the opening range break. But this gave you instant gratification right after the open, launched right up to close the gap, and continued on its way with a open gap crossover or previous close crossover, pulled back to test it, and then up from there. Okay, so I mean, it was up over 6% at one point. It's pulling back now, but yeah, so that's 6% from the open, not what this is recording here is close to close change. We're talking about from the open. If we go back to our odds, you can see it's close to close is 3%. We have to refresh this now, but 4.72% from the open. So that's what we're interested in on our opening the close baskets. But anyway, I just had to chuckle because I thought, hey, look at that AMC's in there. I don't trade it myself. So anyway, yeah, any questions?
No. I mean, you know, it's so far we got an inside day, right? Which is good, I guess. We just that big break.
No, you know, Joel, it's not good. It's absolutely fantastic. Like, people get so frustrated in the noise because they don't know how to switch gears from trend or signal, you know, a high signal, high pace type environment to nothing going on, chop noise, every tick, they're like, what's happening? What's in the news? Like you said earlier, like what's going, nothing, it's noise. It's, we had our rest day yesterday. We're continuing with, we need a little bit more sleep here. We're kind of tired from our big shellacking day.
Yes.
We need a little bit more sleep. We need to rest up, and tomorrow's expiration. So all I'm saying is this is fantastic. Whatever way we break out tomorrow is probably going to have some follow through to it on the upside or the downside. But the backdrop seasonally is a poor performing day.
Okay. And, it's, from my perspective, that high that we put in yesterday at 81.25, and then today, as things stand right now, 77.50. So there's your wall on the upside. I'm not going to get no optimism about this market until we take that out. And on the downside, I mean, we were all waiting for that test of last week's low yesterday at 3,900. Maybe we'll get it today instead. But that's it. Pre-market prep with stock odds. Wrapping it up before the day ahead of this expiration Friday. We should have some fun tomorrow. Thanks for joining us. And for sure, we'll be back with some tidbits tomorrow.